Picture this. Your boss gets secret information and about what your company's about to do, goes and buys and sells all the stock in the right areas at the right times, makes a killing. Well, this really is just telling you at the end of the day to work harder and invest more. Most people will go to jail for that. And that's what we're here to talk about today. But in Congress, it's totally legal, or basically. So in today's show, we have former congressional candidate Frank Pallotta, an investment banker for a long time, quite a bit of experience. So Tyler and I are very happy, you guys come back to Bridging the Gap, and very happy to have on Frank Pallotta. So thank you, Frank.
No, I appreciate it. Thank you both for all you do with Jersey First and just everything you do to try and help the people and the voters of New Jersey. So, yeah, thank you.
Yeah, good thing you're here every so often.
Right.
Tyler does most of the work, as you can tell. He's the elected official of the group. So
yes, one of the youngest elected officials in the state. Congratulations.
I appreciate it. It's an honor and a privilege.
Although I will say he didn't make Insider NJ's top 100 people this today. So, but neither did I. So I don't know. Maybe
Right.
Maybe we just didn't talk to the right people just in case.
Maybe next year.
Maybe next year. Yeah.
Yeah.
So, well, Frank, obviously we want to come talk to you today about insider trading. You spent multiple decades on Wall Street working, not doing insider trading, the exact opposite, right. Trading. And so you've been working in Wall Street, you've been working in the finance area, you've been working in different areas. And I know when you ran for Congress, you had multiple bills and different ideas on how to make changes in Congress to almost bring back the trust within the American people as a whole.
Yeah, look, it's exactly what you said. I mean, insider trading from our congressional leaders is a violation of the public trust. You were elected by the public to do what's right by them, not by yourself. So when you start to see things like this happening once or twice, you hear about it a couple of times, and you might look the other way. When you start to see the returns and everything that's going on, and my experience on Wall Street, 20 plus years, we spent decades on Wall Street rooting it out, not just finding out, but trying to stay 2 or 3 steps ahead. And so that's what I've recognized with some of our congressional leadership is they seem to have this view that they're just not subject to the same rules that you and I are. So you're right.
And before we jump head first into this sort of complicated issue, definitely,
right?
Yeah, maybe sort of complicated is an understatement on some of these things. But can you explain to the viewers what insider trading really is?
Sure. Insider trading at its core is acting on non-public private information based on where you get it and how you get it, which is why on Wall Street it's been a real big deal. And it's something that we've looked at for years is if you're insider trading, I mean, the hub of what Wall Street does is trade securities. Obviously, there's banking and other transactions that go on, but when you look at SpaceX, when you look at all the different large transactions that have happened, it starts on Wall Street because when you come to the public markets, which is where the trading happens, it has to happen through fiduciaries, it has to happen through investment banks. So again, at its core, it's acting on insider information that no one else has. And when I say no one else has, there's a difference between information no one has and information that many people have, but you're able to decipher it in a better way than most.
You just transitioned right into kind of what I wanted to talk about next.
Yeah, Frank, I know you said you have over 20 years experience on Wall Street. How would you say insider trading works down there in Wall Street?
Well, I had, the wonderful advantage of working at firms like Goldman Sachs and Morgan Stanley, where they really take this public trust very seriously. Not that other firms don't, but I think they were at the forefront. They were well ahead. And let's just give an example of, there's a lot of stuff that went on, within the walls and the roof of Goldman Sachs and Morgan Stanley. And you were expected, there was some measure of trust, that if you were in a meeting and you heard about Bank A buying Bank B, you were not allowed to go out and buy Bank A or buy Bank B, depending on what you thought the results would be. And early on in the 80s, to show you how old I am, but in the 80s, where this was happening a lot more, they needed to figure out what was going on because this violation of the public trust is a violation of the shareholders. And so it used to be that those people that were involved in those transactions, those banking behind closed doors, they were not allowed to trade on those securities. But what they found out in very short order was, one, it would just happen anyway. and they would try and it would happen by not having the banker or the trader do it, but a relative, a friend, an intermediary, a third party do it. And when you start to look at, and again, it's not real tough to figure out that, if Joe Blow, the bartender, was all of a sudden executing options trades in volumes that he doesn't even have. There are algorithms that exist on Wall Street that the SEC looks into where you can figure out if you were, again, my barber, and all of a sudden you started trading in these complicated transactions, they could figure out, okay, Zach or Tyler, how are these guys doing this? And they have the ability to look through and they say, oh, what's the common link here? Bartender and barber. Okay, they both work in close proximity to Frank Pallotta. Frank Pallotta works at XYZ Law Firm, XYZ Investment Bank. XYZ Investment Bank was the lead banker on this large transaction. They both benefited. Frank goes to jail. You guys, everything from going to jail to profits expunged. So when this started to happen, again, they looked to individual traders to make sure they couldn't do it. I'll fast forward 25 years later. By the time I was at Morgan Stanley, and I was a partner at Morgan Stanley, I couldn't do anything. Didn't matter whether I was in the room. If you were a partner or you were a senior official at any of these Wall Street firms, you were prohibited from trading anything at all. Because you're talking about a firm that might have 20, 30, 40,000 people in different countries who can talk to each other. So to avoid even the appearance of impropriety, some of these larger firms over the course of a few decades went from you can't trade in a certain stock to you can't do anything. And that worked out pretty well. We can talk later on. We've extended that where family, friends, and siblings were also not prohibited from trading, but there were different hurdles that my wife, for example, if she wanted to transact in something, she wouldn't be prohibited, but she would have to submit, hey, I want to buy XYZ stock. And they would have to submit that to Morgan Stanley. And Morgan Stanley would then let them know whether I was involved or not. If Morgan Stanley was involved in a transaction, she might be prohibited from trading in that stock. So they made sure that they looked at the second and third and fourth derivative relationships to make sure that they were not in any trouble. And a couple people like Michael Milken and others go to jail. And all of a sudden, you want to put in front of a banker a reason not to inside trade, try throwing jail out there.
Yeah, that usually gets the job done.
Right.
So can you give us an example of like a real world example if possible that you've seen in your experience? You don't have to use names, obviously.
No, well, let me give you a real world example of something that happened to me.
Yeah.
When I was at Goldman, everybody used to read on the weekends. There was no internet. We used to read Barron's. And I read Barron's, and there was I forget the name of the stock, but it was a company that did something with desks. And it wasn't Veridesk, but it was something like that. It was more on the technology side. And I read it, and I loved the story. I got to work the next day, and there were no restrictions on what we can do, except, as I told you earlier, if I was involved in a transaction going on at Goldman Sachs, I couldn't buy or transact in that securitization, in that security. So the next day I went in and I bought some insignificant amount. I was still ironing my shirts at home at the time, so there wasn't a lot to spend. I was a kid. And I bought the stock. And maybe 2, 3, 4 weeks later, I don't remember the time frame, that company gets taken over. And maybe I made enough to buy a sandwich that day. But the stock went up. It might have doubled. Again, I don't remember it. And I thought, oh, that's awesome, because it was innocent. I bought it. I read it. I did my homework, and the stock went up. A couple days later, I get a call from compliance. Hey, Frank, this is such and such from compliance, and we want to know XYZ desk company that you bought. Why did you buy it? And I said, it was in Barron's, and I liked the story, and this was the reason. And I talked about the earnings per share and other things in the multiple at the time, which I thought was undervalued. And I bought it, and they said, well, Goldman Sachs was one of the bankers on that transaction, on that transaction. And of course, I go white, wondering how I'll look in pinstripes. And then the woman started to laugh. And she said, you know what? There's about 25 people at Goldman who bought that stock based on exactly what you said, what was in Barron's. And that just shows you that the information that Barron's puts out, my ability to read it and look at it and decipher it, But I think that was the very beginning of where Wall Street decided even the appearance of impropriety is not right. Frank honestly didn't know anything about it. Neither did the 20 or so people there. But this was a real world experience. And that's where Wall Street, Goldman Sachs and Wall Street started to tweak the rules a little bit to say, okay, now the more senior you get, that's going to be a problem. Frank, you can't buy it. Or if you want to, you've got to put it through. And in that instance, if I put through to compliance, hey, I'd like to buy XYZ stock, the compliance person might have said, oh, you know what? We know there's a transaction potentially happening in the upper reaches that Frank has no idea of. And the response was no. So believe it or not, there are people that would do that, and they would know if the response was no, something was going on. So they would then call people and say, hey, I don't know what's going on. However, so that morphed into now you can't do anything. And at the time, Goldman, I was vice president. I mean, it was a big deal to me and my father at the time, but partners at Goldman Sachs, Hank Paulson and guys like that, they know a lot. But by the time I got to Morgan Stanley, Wall Street had morphed to a point where if you were a partner, you couldn't do anything, like treasury bills. I think I was able to do treasury bills. Look, keep in mind.
What, you could do treasury bills?
Who was our treasury secretary at the end in Morgan Stanley? Hank Paulson.
Oh, okay.
So
I guess there's the
there's the thought to do it. But look, there's ETFs and there's other funds that you can buy or transact in, but the appearance of impropriety. So there's a real world kind of example. I don't know. Look, I people talk about Michael Milken and what he knew and how he knew it, but this act goes far beyond just having inside information. There's another level of insider trading and manipulation that if you own a stock already, can you do things that would cause that stock to go up and down based on the firm that you're in? You know, I watch the movies Trading Places, and I watch, what's the Michael Douglas? Wall Street. Those are real world type scenarios. Yeah, that was before your time.
Yeah, it's all right. They're gonna tell me Big Short, the movie that you read apparently.
The Big Short, right. So those are some real world examples. And, our congressional leadership, for lack of a better phrase, they're in those boardrooms when those decisions are being made. And those decisions are not being made by a handful of people that are watching a stock or a company value go up and down. They're managing the trust of 327 million people. And they are in those rooms, and there's people that are very innocent. But for the most part, when you start reverse engineering some of those returns, I got to tell you, Tyler, it boils my blood that these guys have taken that responsibility that they have. And some of them have turned it into, I wouldn't say, a lot of money. I would say life-changing generational wealth. Some of these people have.
I can name a few off the top of my head already.
We can.
Well, I know you touched base about, how a lot of our congressional leaders are, involved with insider trading. How would you say, in 2026 this plays out in Congress today?
I mean, look, we'll go back just a few years, during COVID, there's a lot of money that went to companies that were involved in vaccines and research. Before that, the CHIPS Act. The CHIPS Act is an example that I used when I was talking to people about how not just Wall Street, but it happens in Congress. You're behind closed doors when you're talking about the concept of providing money, providing capital to chip manufacturers. And if you know enough when you walk out of that room, you know that when the United States government stands behind an industry or a company or stands against them, there's going to be movement in that company. There's going to be movement in that stock. And the CHIPS Act is a good example. NVIDIA, for argument's sake, NVIDIA did remarkably well. A lot of chips company and technology companies did. But when you're a congressional leader and you're on a committee or a subcommittee where you're looking at where to allocate or how much money to put into or create for the CHIPS Act, and you own the stock or you happen to then buy the stock that's going to benefit from the CHIPS Act, that stuff gets you thrown in jail. Like, that's why Wall Street put the rules in place. You can't innocently go out and buy stock in Bank A when 2 days earlier you were in a boardroom meeting where company A was going to be bought for 3 times the value of what company A is now. So that's how it works, in Congress. They're involved, these committees and subcommittees, there's a lot of stuff that goes on. And I'm not talking about public meetings. I'm talking about the discussions that go on where you basically say, look, there's a lot of money that's going to go to pharma companies to try and battle COVID. And we're going to make sure that they have the money they need to put out 10, 15, 20, 30 times the amount of medication that they're going to put out. And we're going to fund it. So we're not talking about R&D. We're talking about pushing it out, and they're going to be compensated for it. So you can see between the CHIPS Act and what happened in COVID, while we were suffering, we citizens were suffering. Businesses were being shut down. People were dying from COVID. And here we are in a position of saying, well, let's just start picking out vaccines. That's another story, whether the vaccines really work. But the truth is, that was happening. CHIPS Act, it was real. It was happening. We were looking to help U.S. manufacturers compete on a global stage. And what were they doing? They were buying the individual stocks for those companies. It's a good job if you can get it.
I was going to say, Congress, and you get paid to do it too in Congress.
Right, right.
So, it's I'm going to jump off script a little bit on this because I know we can talk about congressional stuff as a whole, and that's where we're at. Our congressman, Josh Gottheimer, who I know you've run against, but you have a good relationship with him.
I do.
We understanding he's not the only member of it, but he's one of the more prolific ones. So insider trading, or just in general trading as a whole, he's really good at it too.
Yeah.
Apparently, he's better than Nancy Pelosi according to Forbes.
He's returned. There's a couple of measures for who are the most prolific traders in Congress. Number one is Dick Blumenthal. And again, the measure is how many shares, how much dollars in transactions. Yeah. The other is, what are your returns? Mm-hmm. And both of those are off the charts. Yeah. Now, if you're a multi-millionaire before you get into Congress, it's standard that you would transact. Yeah. Now, my personal view, we can get into this later on, the steps I think should be taken. But when all of a sudden your returns are 6, 8, 10 times Warren Buffett's, the greatest investors the country has ever known, and you're lapping them, and you don't do it for a living, and you don't have the background and the experience to have done it. Mitt Romney wasn't making those kind of returns, and he was in the private equity space. Yes. So that's the sort of thing, Zach, that again, any algorithm, any model out there that monitors all the transactions that go on in the country, and trust me, there's models out there that track almost everything that's going on. They look for the anomalies. Every member of Congress would spit out, even if they didn't know if they were members of Congress, those returns would spit those out and say, wait a minute, what's going on here? What does this guy know? What does this woman know? Yeah. But the top two in terms of absolute volume, number of shares, is Dick Blumenthal, Democrat, and I forget who, Republican out in Texas, Mike McCall, maybe? Is that the name?
Yeah.
He's number 2.
Yeah, it's bipartisan at the end of the day.
Yeah. Now, 6 of the top 10 in terms of absolute volume are Democrats, but that's not enough to draw any conclusions. No. When you have access to that data, that information, you can pretty much.
I mean, they make whole apps now of like the Nancy Pelosi factor. And the Nancy Pelosi tracking. You can buy stocks that she's doing. I know that I've been talking with friends of mine that are like buying stock that Donald Trump buys, just because like it seems like he's the one making bigger dividends than the rest of us. Right.
So, and we can talk about this whenever you'd like. The real killer returns do not come from just simply buying and selling stocks. No. There's call or option strategies that if you know, and we can talk through an example if you want. Let's stock trade. And I just picked out eBay because it's easy. It's trading at around 100. Yeah. So the math is easy for somebody like me. Stock is trading at 100. You want to buy 1,000 shares, 100 grand you put to work. And there's legislation that's going to make eBay the only auction house in the entire world. And the stock is going to go up. You go out and buy eBay. So you buy 1,000 shares at $100 a share, you put $100,000 to work, and the stock goes up in 60 days by 20%, goes up 20 points. You're awesome. You made 20%. That's 2.5 times your money on an annualized basis. And that's great. But now you look at the options market. Okay. An option by definition is the right but not the obligation to purchase a stock or sell a stock in the future at a predetermined price. So if you look at where eBay stock options are trading, the option to buy eBay, now eBay we know is trading at 100. The option if you buy a call option on eBay that's trading at 100 for the future value of 120, that option, now the option is worth less than, because it's currently trading at 100. Why would I buy an option for it to trade at 120 unless I think it's going higher? The cost of that option is 50 cents to buy that obligation. Okay. So if you put the same $100,000 to work on an option to buy eBay at 110, not 120, it only costs 50 cents. So you buy 2,000, there's leverage here. You buy 2,000 contracts for the same $100,000. If the same thing happens with eBay, where it runs up to 120 over that 60-day period, that option that you bought at 100, at 50 cents, is now trading at, sweet Jesus, is now trading at $10 a share. You made, okay, 50, think about that. That's a 19, well, if you factor in the cost of the fees, that's a 1,900% return. So your $100,000 where you bought the stock goes up to 120, you make $20,000. If you put the same $100,000 to work in stock options, in that option for that specific $2 million. Okay, this is what leverage does. This is what the information does. Okay, now are your seatbelts on? Let's go to the next level, and this is where it begins to manifest. This is where Wall Street and Gordon Gekko and Bud Fox start rolling in. A lot of congressional leaders tell you, I don't do the stock trading. I give my trading authority to my broker. Well, that doesn't mean anything, because you can talk to your broker. You can give your broker information. That's why a blind trust is better, in theory. So Congressman talks to his broker. His broker basically executes that stock option, and for good measure also buys some stock. He gets off the phone with his congressional leader. Hey, we just did this. If things work out, this is going to be awesome for you. Well, that broker doesn't have one client. That broker has 20 clients. So what does he do? He calls the other 19. Now, he might not even mention the congressman. He might even mention that he's got inside information. He might not even have the inside information. The congressman may have told him, I want you to buy this, because he's sophisticated enough. So that broker then tells 19 of his other clients. So now it goes up exponentially, because stock, to some degree, technically, it's a measure of supply and demand. Fundamentally, stocks will find their own level, but there's intra-sector anomalies and intra-sector trading where it can go up. So now that broker just leveraged, and he told his other 19. That broker works in a law firm with 10 other brokers. They then have the information and tell their 20 clients each. So now that Wall Street firm with all those brokers are starting to buy or starting to transact to the benefit. So now the first guy that got in, the congressman, now you start to see the wave. This is before anything is announced. Now you start to see the stock go up. Now the other Wall Street firms have their brokers doing the same thing. Now let's take your seatbelt on again. Now let's take it another level. Those Wall Street firms that have brokers who are executing on behalf of their clients for fees, they also have what's called proprietary trading desks. They can transact in certain securities themselves for their own money, for the company's own money. So now we're not talking about millions and tens of millions. We're talking potentially hundreds of millions of dollars, because these large Wall Street firms would take large positions in those companies. They wouldn't buy 1,000 shares or 10,000 shares. They might buy 2 or 3 million shares. Now you add a lot more zeros onto that. We're not done yet.
We're not done yet.
Those are the Wall Street firms. Those are the hedge funds that take positions in securities, positions in stocks. When you move into the private equity space, and let's just go back to the eBay example. Private equity firms are firms that invest in the purchase and sale of companies, not just the stocks of companies. So now they're smart enough to know, gee, if this company eBay is going to become the, one of the leaders, what is eBay going to do somewhere down the road? They can try and grow organically, or they can go buy another company. So now this smart private equity group might go out and buy small takeover targets.
Yeah. That's
how millions become hundreds of millions, become billions. And that's how big and that's how great this web can work. So we can sit here and talk for hours about where this is going on and what happens, but this is the sort of thing that I think needs to be addressed. And you and I talked about this. I wrote something a while ago, because what we knew in Wall Street over the past 25 or 30 years, we can apply this to Congress tomorrow. And if you think for a minute that you're going to stop insider trading by telling a congressman that they can't trade individual stocks, and this is what we talked about, that's like trying to stop the Medellin drug cartel from being a global powerhouse by having one dealer not sell drugs in a schoolyard in New York City somewhere. That's the magnitude of telling a congressman you're not allowed to trade stocks. So this has to be, and it's not new. We're not inventing anything. This exists. So we need to enact something immediately, and it would take no time at all to do it.
I would love to talk a little bit more about what that would look like.
If I had to wave a magic wand,
yes, if you had to wave a magic wand, what would be like? I see. You just said individual stocks isn't going to do anything. But like, what does that look like then? For
this is look. There's a few steps, and again, I think first and foremost, some people had said, make them liquidate all their securities. Make them liquidate. I don't like it, because the American dream. If you have somebody who worked for 25 years to build his family fortune and he wants to serve the public in Congress or in the state legislature, you can't say, great job growing your business, now sell everything. But what you can do, and we should do this, is every single legislator, existing legislator today, anybody running, will put all their holdings in a qualified blind trust. Okay, no contact, qualified blind trust. They would have no contact whatsoever. I think that's the first step. There should be no exceptions, not a portion of it, not anything else. You can't ask them to liquidate, because sometimes there's family fortunes that are in certain securities. So it would be managed by a blind trust. My view, have the blind trusts collectively. You can't tell somebody, here's the blind trust I want you to use, and they can't tell you, oh yeah, my uncle, he owns a blind trust, or he runs a blind trust. So there's got to be some measure of oversight as to what those blind trusts are, what they're doing. Again, you can't prevent somebody from managing or picking out, but we can figure out how a blind trust would be selected. Maybe they would go through a vetting process, but that would be the next step, is making sure all their securities, all their holdings are in a blind trust. The next step I would do is ensure that, and I think we looked at potentially, Zach, 5 levels of relationships: spouses, children, parents, whatever just to make sure that you're not talking to your buddy down the road. Keeping in mind, if they put the same kind of oversight that Wall Street and the SEC puts on the 3 of us, they'll find out who they are anyway. But you would prevent that second derivative set of relationships from, not prevent them from trading, but they would have to go through another hurdle. And the blind trust. Now, I like the idea of oversight on the blind trust for this reason. There does exist a situation where the blind trust may say, gee, you know what, I like the technology sector, or I like the chip sector, and I'm going to make these investments for XYZ congressman in the chip sector. Now, if XYZ congressman sits on a committee, might have been completely innocent. However, the appearance of impropriety would be a little bit more. It would start all the conspiracy theories, Lee Harvey Oswald, building it. So I think there should be some restrictions on whoever that congressperson is, that they couldn't have more than a certain percentage in an industry that's consistent with the subcommittees and the committees they sit on. So if somebody happens to sit on a subcommittee that would have some magnificent effect on what's happening in the banking industry, that blind trust administrator would know that that congressman's portfolio can't have more than, pick a number, 3%, 5%, 10% in that sector. That starts to begin, a bit more of the oversight. Now, you can take this a couple of different, a few more levels down the road. You can actually, if XYZ congressman is sitting on, the subcommittee for technology or the CHIPS Act or whatever it is, I would almost look to how much money they can raise from individuals in that sector. That gets tougher to really police, because if you like a congressman because of where they stand from a party standpoint, it gets a little tough doing that. But, some of our congressional leaders, you can just look back and see where a lot of their money comes from. A lot of money comes from the tech sector. There's a lot of money, by the way, going back to the private equity and the Wall Street game. There's Wall Street firms where the lion's share of their partnership, irrespective of their party, donate to certain congressmen all the time. So when the chairman of your Wall Street firm, and you make a lot of money because you did well, and the chairman of your firm sends out an email, hey, I like John Smith, who's running for Congress. I gave him the maximum of $5,000. It would be great if you can donate to John Smith. I'm not telling you have to, but I'm the damn chairman of the company and you work for me, so do whatever you want. That sort of thing happens. When I was running against Josh at the time, I spent my career on Wall Street. I knew a lot of people on Wall Street, and most of the money that I raised from Wall Street, believe it or not, I ran as a Republican, were from Democrats. And these are people who believed in me, who believed in why I was running. You were part of my campaign, believed in why I was running. But there were a lot of people who said, yeah, I can't donate to you. I'm like, I don't know, because I don't want it to appear on any sort of FEC forms that I was donating to you, because you're running against somebody who's very close to the chairman of my firm or such and such in my firm, which, you know what, whether they're full of crap or not.
Yeah.
So those are sort of the things that you can put restrictions on. But here's, and this is just my own view. And when I mentioned this to a congressman who I was on the phone with recently, if you can stop or at least put a huge lid on insider trading by having these sort of rules and legislation in place that prevents them from taking advantage of it, I personally think you can solve for term limits. And hear me out. A lot of these people, the Nancy Pelosi's and Blumenthal's, who do this for a living, and by the way, our founders, there's a reason they had 2 terms for Congress. Yeah. Is you do a couple terms and then you go back to the farm, the family business, the steel mill, wherever it is you go back to, which is why I believe our congressional leadership believes that they're exempt from this, because they have to go back to their business. So they've got some sort of federal preemption from doing it. But when you take a look at why these people are in place for as long as they are, power and money. That's why. Now, you've got a selection of people that do it because they want to. I would be one of them. But power and money. You take away the money, then you take away the power. You take away the power and the money, why do you stay there? Unless you want to serve the public. And that to me, you solve a lot. I mean, the approval rating for Congress is sitting at about 8%, give or take. And that might be high from people who are scared to say no.
It goes back to the phrase, everyone hates Congress but loves their local congressman.
Yeah. Yeah. So I think you solve a lot in the country. I think you solve a lot with the trust and it's not just Congress. I mean, there's a lot of people who are, we talked about your family and your other friends. I think the staff should also be prevented from transacting. Now, these are people who probably have to dig deep in their pockets to buy a Starbucks because they don't pay them a lot of money.
Yeah.
But I just think, like I said, on Wall Street, from the partner all the way down to the young associate who just graduated college, they have the same restrictions on what they can transact in, irrespective of how much you make.
You covered a lot of what we want to talk about as a whole in general. So, one thing I would definitely want to ask is, what can Gen Z and regular people of New Jersey actually do about this? How can we put pressure on our representatives? With some ideas of is this just we need to talk about it more if we really want to really change it? Because I also feel like it's one of those issues, voter ID is one of those issues that more than 60% of Americans want.
Like,
Mhm.
you know, we all majority of Americans feel that's unfair, but like, what is that like? Is it because no one's putting any pressure on people?
Absolutely. Look, if you want to look to Congress to police themselves, you're out of your mind. If
That's
congressional leadership does figure out, holy cow, you know what? This is a big deal in my district. There's ways to thread that needle.
Yeah.
And here's how you thread the needle if you're an existing congressman who's living on those 20, 30, 40% returns right now and love it. If you wanted to run for Congress in a couple of years and you started to run on that notion, Gen Z would take notice and say, you know what, that guy's living in the same world I'm living in right now. And he's running against somebody who at $174,000 salary, you know, has made $16 million over the last 60 months.
Yeah.
How could that possibly be? So some of these congressional leaders, the way they get out of that is they basically say, you know what, we're going to enact insider trading legislation and we're going to phase it in over the next 5 years. You don't care because at this point you're saying, you know what, I'm getting in there. I'm going to do what's right by my guys. All the other congressional leaders are basically saying, you know what, I got a 5-year window to do what I have to do. But you get the optic, you get the headline of saying, you know, Dick Blumenthal approves insider trading restrictions. And it's not just you can't trade stocks. People start to understand because everyone's going to listen to this.
Oh, yeah.
You start to understand the web is huge. And the second and third and fourth derivative type of transactions are also huge. And that's where you start to see congressional leaders say, you know what, I now have I need a headline. I need to. So they come out and they say it based on that kid who's now running, who basically is telling his constituents, look at what the guy drives. Look at what that guy does. And, you know, again, he went from making $174,000 a year, having a net worth of $600,000 when he took off, to now being worth $45 million in just 5 years. I'm not going to be that guy. And I'm going to make sure. So that's how I think you do it. Gen Z has monstrous power right now. You know, you're the largest, one of the largest voting blocks coming up. And I think, you know, the power of the purse, look, you know, basically companies have figured out how to, you know, you go on TikTok, there's 1,000 ways to spend money for a Gen Zer to.
Oh yeah, TikTok shop. Yes.
There you go.
You can buy it. It's all cheap too. It's like going on Temu, but like even discounted.
Yeah, and that's subsidized by TikTok, which I think is great. But hey, if I can buy a pair of sneakers and be 3 inches taller just by spending $21 on sneakers, I'm going to do it.
I just figure a congressman, you know, the stock, he stands on top of his money, he's 6'5", you know.
Exactly.
He's 5'1", by the way, for reference.
Oh, Josh.
Yes, he's extremely short. So
be careful what you call extremely short.
Okay, yeah, I know.
There, right?
Look, this is me coming to
Be clear.
May not come back.
I know. Yeah, if Josh is real right about that, you know, you being a mafia boss. Yeah.
Exactly.
Oh my gosh. Well, Frank, I think we're coming up on time right now, but I want to thank you very much for joining us both today. I know Tyler is very interested in this, you know, coming from the finance world and insurance, and you know, just some political games. Goes up the trend or down the trend, just start yelling at people. So it works sometimes.
No, it does. Look,
So.
they're, and I just want to say it's an immense responsibility to serve the public.
Yeah,
it really is. And I've been on both sides of it, not serving the public in that matter, but I've had my kind of toes in that water, both on Wall Street. And there are times, most times, that I think when our government gets involved in, you know, the financial crisis and other crises. You know, I'm not a big guy that I think government should be involved in everything, but there are times that the government has stepped in over the last 30 years that I've been in the market, that I've been watching the markets, where it has helped. I think the government stepping in, and Hank Paulson and Tim Geithner and Ben Bernanke, when they stepped in during the financial crisis, I think it averted an absolute meltdown of the U.S. economy. So what does that show you? It shows you the power of when the government steps in, they're able to move markets, they're able to move countries, they're able to move global markets overall. And I think that showed a lot of people who are doing this for the wrong reason to know that if you're part of that not only can you change the world for the better, you can change the world, you can change your own personal world as well. So awesome. That's my view.
I was about to ask you, what would you like to leave for the viewers? But I think that was a great way of saying that.
I didn't even know you were going to ask that, but yes, I look, I do think, and you know that you and I have been close for a number of years, and I think it's an awesome responsibility to serve, whether it's in the legislature, whether it's Congress, whether it's a councilman, it's a first step to knowing. It was why I got involved in politics. When I was on Wall Street, my customers, my shareholders came first. I did a startup where I worked with veterans. Veterans came first. That was the focus. When the reason I wanted to serve, the reason I wanted to go to Congress was to go from helping hundreds to helping thousands to helping hundreds of thousands. So just keep it up.
Well, thanks, Frank, for coming on today.
Yeah.
Thank you, everyone, for listening to Bridging the Gap. We'll be coming back again in 2 weeks with our next episode. Make sure you guys subscribe and comment below and to follow us on TikTok and Instagram.